Good evening. This is Ken Long from Tortoise Capital Management with a review of the trade of the week from last week's chat room. This one was traded on November 7th, 2012. We're using the regression line crossover system, RLCO. The symbol we're trading is UVXY. That is the double VIX ETF, very volatile. It's a post-election trade, meaning this is a trade that happened the morning after the November 6th presidential election. We're using our current standard trade markup. We're using two Bollinger Bands. The middle one, the large one, is the Blue River. That's a 30-period Bollinger Band with a plus or minus 1 standard deviation. This is all on 3-minute bar charts. Red line in the middle is the Bollinger Band mean, or simple 30-period moving average. The orange ribbon looking indicator is a 2-period Bollinger Band with plus or minus 1 standard deviation. The thick blue line is a 10-period moving regression line. The thick black line is a 30-period regression line. The green circle represents moments of entry, here, here, and here. Red circle indicates the decision to exit. The thick red line here represents our stop management throughout the course of the trade. Vertical blue line represents the start of the day when we began stalking this trade. The purple step function here is the 3-minute volume weighted average price, which shows the moving VWAP throughout the course of the day. So November 6th closed relatively quiet with the VIX at about 27-ish. Obama wins the election. The VIX opens at just under 29, big gap up. Trades off to the edge of the river, starts to move back up. In this region here, we have what we would call the beginning of trending behavior, and that is that price and both regression lines are outside of the river and moving in the same direction. At about 10:15, we have a regression line crossover with the blue line, the fast regression, passing over the slow regression with price moving up. So we make our first entry at 29 even with an initial stop of 30 cents. Price moves in our favor up to almost 30, pulls back in a measured way, dips into the river but never gets to the Bollinger Band mean, reverses and continues higher. When it takes out the previous swing high, we make a second entry right around the moment when the regression line crossover occurs again. So we make our second entry at 30 with an additional 30-cent stop. Price moves in our favor, has a slight pullback, but then continues to march. When it takes out the swing high of this regression area, we'll make a third entry at 30.90, again with a 30-cent stop. It makes what looks like a parabolic move to the top, gets above 32, it gets to about 32.10, and then gives what we call a exhaustion bar, and that is we have a range expansion on the green. It opens, makes a new high but can't hold, turns into a red bar, and then a second red bar, and now price is approaching the 30-period regression line, so we decide to exit at 31.70, given back 50 cents in that little pullback, but we get out at 31.70, and so on the first position we make $1.70. On the second position, $2.70, so that's a 9R move from the first entry to the exit, and when we exit we get all out. The second entry goes from 30 to 31.70 on a 30-cent initial risk is about 5.5R, and going from 30.90 to 31.70 is 80 cents on the 30-cent stops. It's about 2.5, and so we net about 16R from about 10:15 to 11:30, and that's the volatility trade on the day after the election. A very orderly move with some things I want you to observe, and that is that the retracements after surges higher never get to the Bollinger Band mean. The 30-period regression line acts as a pretty reasonable indicator of the primary trend. The 10-period oscillates a little bit with price, but the 30 is a pretty clear indicator. And what I see on this one is the number of surges up. I see 1, 2, and 3. So after the third leg up, and holding 16R in hand, that was over 20R by the time it was above 32. So we end up giving back some R in here. After 3 legs up and approaching the lunch hour, that seemed like a reasonable place to cash the trade of the day. So this is Ken Long from Tortoise Capital. Keep your powder dry and your risk measured.